Now recognizes the gentleman from Florida, Mr. Ross, for 5 minutes.
Thank you, Mr. Chairman, and Mr. Secretary, thank you very much for being here. In my home state of Florida, insurance plays a significant role in our economy and our markets. I mean, we have natural disasters there probably more frequently than other states. In fact, Kevin McCarty, our insurance commissioner, has testified that the importance of insurance companies to appropriately match their assets with liabilities. And I'm encouraged with the Federal Reserve Board's recent announcement that more insurance experts are necessary as we look into continuing the regulatory scheme, and especially with capital requirements that come under Basel III. My concern, and you've addressed this a little bit, you've acknowledged that there's a difference between capital requirements, I think, for insurance companies and for banks. You stated in your initial testimony, your written testimony today, that we will focus on promoting vigorous implementation of Basel III, ensuring that risk-weighted assets are assessed consistently across borders, and that Basel III's high-quality capital standard is met. My concern has to do with what assurances can the Treasury give to make certain that certain insurance companies are not subject to bank-centric capital requirements which do not fit their business models.
Congressman, I know that as the regulators look at implementing supervision, they're looking very hard at the question of how to treat insurance companies. Obviously, they don't have infinite flexibility. They have,
but you've acknowledged that there's a difference between the two. I mean,
well, I've acknowledged there's a difference, and I've acknowledged that they're looking to find flexibility in their tools. I can't speak for them in terms of how they will exercise that.
Would you give them any advice? Would you give these insurance companies any advice as to how to prepare for what may be coming down the pike as far as capital requirements?
My advice would be for them to work closely with the regulators that supervise them, and to have this conversation that we're having right now.
You know, again, looking back at my state of Florida, we have a very good, I think, framework, and we have a very good regulatory scheme. The Financial Stability Board, of which the Department of Treasury is a member, released a report in August recommending that the United States consider federalizing insurance supervision. Is this something that you agree with?
I think that we need to keep taking a look at how we're working at the state level, at the federal level.
Because there's a preemption there that we have to be concerned with. And I think in the Dodd-Frank, we reaffirmed the McCarran-Ferguson Act, and that state-based regulatory schemes work for consumers. But there must be something here that allows for some assurance that consumers can be guaranteed that the federal government is not going to impose new requirements that raise policies, premiums.
The question that Congressman Neugebauer was asking earlier about the studies, the reports that the Federal Insurance Office is issuing, when they issue the report on the future of the insurance industry, it will raise some of these questions so that we can have a discussion of what, if any, is an appropriate federal role. We're very respectful of the state's role in this area. We're also very aware that there is an interconnectedness that raises national issues, and we have to have the conversation and work our way through.
Good, because I want to give you an example. You know, most insurance companies use the statutory accounting principles. You know, they're used, they're required by, in fact, the National Association of Insurance Commissioners recommend that. However, the General Association, General Accounting Principles, GAAP, is used more for bank-centric entities. If FSOC deems certain non-bank entities to be SIFIs, significant and important financial institutions, would they not then require them to change their accounting procedures from the way they report to the state to change to the way they report to the federal government? I mean, that's an issue I see that could realistically happen.
I know from the conversations that I've had with regulators that they are very sensitive to the fact that there is an ongoing regulatory structure, and these are issues they're working their way through. Remember, we're just beginning this practice.
Oh, I agree.
And we have to work our way through to make sure at a federal level, we do the job appropriately, and we do it in a way that doesn't unduly disrupt.
And again, just some assurance because ultimately it's the consumer that's going to have to pay for this. Because, you know, the cost of compliance is one of the largest, in fact, compliance officers is one of the fastest growing occupations in this country. And thanks just a large part of the regulatory environment that we have here. But I guess my concern is that we know what's coming. We know that there's going to be a time when an insurance company may have to make a decision as to whether they can accommodate the regulatory scheme of accounting principles, and in order to do so, their cost is going to have to be passed on to somebody. And I guess I'm just looking for some assurance that may not have to happen.
Congressman, I can assure you that the regulators are looking carefully at how to do this in a way that works for the economy and for the industry.
I'm very hopeful in that. Thank you. I yield back.
Time of the gentleman has expired.